Hey, what's up guys? John here. Some very interesting things happening across the real estate space that large corporations are doing right now. We all need to pay attention to this. Now, a lot of people think that the cheapest way into housing is probably a one-bedroom apartment or studio apartment, when in reality, the cheapest way into housing is a mobile home park. Mobile home parks offer a lot of great benefits to residents. One, they have a side yard, they have a community, they have small amenities, and they generally stay much longer and the rents are much lower. You might get into a mobile home park for $800 a month, $900 a month, into a great community. Just a couple years ago, it might have been $400 or $500 or $600 per month. These private equity firms are realizing, hey, I get to buy a large block of land with tenants that stay a long time where they have no other option but to pay me more. And they buy these properties and they just jack up the rents much greater than they could on a one-bedroom apartment. Now, a one-bedroom apartment has some different variables. A one-bedroom apartment is dictated and determined by many ways a studio apartment, what a studio would rent for of like kind in a community. Similar amenities, similar location, and so they increase the rents in relation to what the market would bear. A two-bedroom apartment in many ways is reflective of what a one-bedroom apartment would charge, right? But a mobile home park is so much undervalued than both because they have different benefits that a traditional apartment wouldn't. For example, a normal apartment building might have 50 or 100 people inside of one building under one roof, whereas this community has all these amenities and it's almost like your own private house for a fraction of the cost. And so these private equity firms are saying, you know what? Market's crashing, problems are coming, there's going to be an affordability crisis, inflation is getting out of control, gas prices, everything's getting expensive. Let's go after mobile home parks. And so you look at these big private equity firms, Blackstone, $550 million bet. Mobile home parks, this was 2 years ago, right in the beginning of all the chaos, right? 550 mil. And Sam Zell, this guy is founder of Equity Residential, Equity Lifestyle. He has a bunch of different companies. He's done extremely well in the real estate space, and basically everything he touches turns to cash. This guy is a real sharp guy. He got into mobile home parks in 2009, received a 1,300% return on his investment with his investors. 1,300% return. This guy owns 998 RV parks in America. 998 RV parks, there's only 43,000 of them. He owns a 43rd of all mobile home parks in this country. Like, you think about how much power these private equity firms are taking, and what are they doing? They're doing something unique and kind of obvious. They're removing all the amenities, or as many of them as they can, from these properties, reducing their overall expense and responsibility on the property, and then jacking up the rents. And what are these people going to do? They're going to do nothing. They have to pay, right? And what I think is very likely to happen is they're going to push a lot of people into homelessness. So there's going to be a lot of people that are going to go, unfortunately, homeless because of everything that's happening in the world. But when you have 6% of the American population living in mobile home parks, that is a big problem. You think about all the women, children, all these people that are going to be displaced with these private equity firms running out there and simply buying up these properties. Now, it's not as though they're just simply getting all these profits. Property taxes are going up as well across the board. Insurance costs are going up as well. But they are definitely doing what they can do to profit on this situation. There's no doubt about it, because people have no choice but to pay. Look at this. Mobile home rents increase skyrocketing as corporations take ownership. Rent in the U.S. is up 20%, according to Rent.com. Mobile or manufactured homes have historically been one of America's most affordable housing options, but now investors are buying up mobile homes and jacking up the rent. Federal data shows 20 million Americans, about 6% of the population, live in manufactured homes. In Minnesota, 80% of them are considered low income. Right? And Navidad Seafield calls Park Plaza Cooperative Home something she's grateful for now more than she's ever had. I spent a lot of time crying. 3 of my friends right now are homeless in their vehicles. Now, if you've ever driven through downtown LA or really any neighborhood in Los Angeles, you'll see one mobile home or one more, RV parked under a bridge, parked under an overpass in a private community or in a residential area. You'll see one after the other, right? They're just everywhere. They're littering the streets. And the reason being is people can't afford the rents, and it's easy for people. They can spend 5 or 10 grand, buy one of these vehicles and park it and split it between 2 or 3 people. In many cases, these things don't even run, right? And they park them there with no parking regulations, or they just take the fines and rip them up. So, we're starting to see this happen across the cities where people are actually getting displaced in a massive way. 3 of my friends right now are homeless in their vehicles. CFL lives in a resident-owned community where rent is just $520 a month. You think about the spread that these private equity firms are thinking. $520 a month. You go to anywhere in America, you're spending $1,200, $1,500 for a one-bedroom at a minimum. If you live in a big city, it's well over $2,000. So if they're looking at this, they're saying, well, rents can jack up by 200%, 250%, and mobile homes are 3 bedrooms or 2 bedrooms. They can fit a lot more people. There's more capacity. They're going to be pushing these rents up to the roof, and they're going to say, you know what? In not so many words, split it with other people. Put other people in these mobile homes, right? This is what they're doing. Rents has barely budged since 2018. There was a $6 increase that was approved by residents to build a community center that doubles as a storm shelter, but parks owned by out-of-state companies are a different story. When I moved in, rent was $694 a month, and now it's $840. It has been 4 years since Trevor Nelson, who lived in a park in Lake Elmo, owned by an out-of-state company. He's been the president of All Parks Alliance for Change, a nonprofit that advocates for Minnesota's 180,000 mobile home park residents. Manufactured housing, even though the houses are affordable, if you cannot afford to pay the rent, there's really not a deal. The cost of manufactured housing has increased. The average sale price for a manufactured home has risen nearly 50% in the last 2 years, from $82,000 to $123,000. The cost of renting land from manufactured homes rises 4 to 6% per year. Dave Anderson with Minnesota's All Park Alliance for Change says out-of-state investors, buyers see that land as profit. You think about this, they're just buying like entire parks with no real cost, and then charging people to live there, right? It's such a huge opportunity for these investors, not just from the rents that they can potentially increase on, but they definitely can increase on, but also the land value is just going to continue to rise as fiat currencies continue to erode in value. And land's a finite source, right? So there's only so much land available. These private equity firms realize there's so much cash out there. Might as well take that cash, borrow cheap money, put 20, 30, 40% down, borrow cheap money, buy these properties, and then just jack up rents to the roof. And the more that they can increase rents, the more the property is going to be worth, and the more they could potentially sell it for later on, right? They won't sell it to everyday mom and pops. They would sell it to other private equity firms, or they would just simply do a refinance and take loans out against these properties. The difference, though, with these mobile home parks, genuinely, is that you're not able to refi these properties like you would a multifamily property. So you're probably going to need 50% equity in the property, 60% equity in many cases to get the refi. Whereas like a commercial property or a larger building, they would do it for maybe 75% loan to value or 80% loan to value. So if they buy these properties, let's say for example they bought it for $20 million. And they bought this property for $20 million and they were able to increase rents 100%, that property would likely be worth $40 million or a variable in that area, right? And if they put, let's say 50% down on a $20 million purchase, so they have, $10 million debt on the property and it goes to 30 or 40, they would obviously be able to get their entire investment back out of that property, hold the property, cash flow it, and buy other assets, right? Out-of-state buyers scooped up more than 80% of all home sites in the market in Minnesota in 21. 80%. It's a big worry what's going to happen in manufactured housing. If we continue to see outside buyers come in, they'll get rid of the amenities, they'll raise up the rent, exactly like I said, they'll add on service fees, and it's just so different. Or maybe they'll come in and everything is great, we only hear about the bad stuff. CFL said people should keep in mind that there are probably some good commercially owned parks too, but changing over to cooperative allows residents to control their finances, land, and grants. All Park Alliance for Change says that there are some laws working against manufactured homes being accepted. Some cities prohibit manufactured homes from being placed on a private lot. Others set up regulations that a site-built home could meet, the manufactured homes could not. The homes could be classified as personal property instead of real property. Owners get a title instead of a deed, which means you get a personal property loan instead of a traditional mortgage, right? So that's what they're looking at. And when we see where rents are going, it's just across the board. They're just going to continue going up. That's what I think is going to happen the next couple of years. I think private equity firms and institutional investors, they're going to be diving deep into mobile home parks in such a large capacity, because as everyone else starts running into financial hardship, the last option before homelessness is going to be a mobile home park. We're all afraid of massive rent increases hitting mobile homes. Mobile home parks, I believe, are just the best investment for corporations, for private equity firms, for institutional investors, for pension funds, for insurance companies, for big banks, and everyone in between. They love these properties, and I think it's going to be a very, very strong investment vehicle for all of these companies. And if we look at what's really happening, is that this investment option is the last resort, the last stop for millions of Americans. Why I think that is we're going to have so many people priced out of their properties through rising insurance costs, through increased just maintenance fees, maintaining your home, fixing up your properties, doing everything that you need to do to keep everything in line. People are going to say, you know what, I no longer can afford that property, or the adjustable rate mortgage changed my affordability on this property. There's going to be so many different variables. People are going to be forced to sell properties over the coming few years. And where are they going to go? To a $2,000 a month, one bedroom? Probably not. They're going to look for cheaper alternatives to save money. And if this is the cheapest option, this is the last stop before homelessness, there's going to be nothing but more and more and more demand for these investments. All that is going to do is just continue jacking up rental prices. And private equity firms and all these different investment vehicles are going to say, you know what, we're in uncertain times. We can go out there, buy a ton of land. We could rent out these properties. We can pull in that revenue. We can jack up rents. We can control our capital and control the people. And they love nothing more than control, right? That's what they love. They love control. And this is the biggest form of control when you control someone's housing, and it's the last stop. What do you think about this entire situation? Where do you see mobile home parks going? Do you think we're going to see mobile home parks, these traditional parks going from $695, $800 a month to $2,000 to $1,800? Because that to me seems like a very viable alternative. That's probably what these private equity firms are thinking. Because where would you rather live? In a nice mobile home park community, if you have 2 children inside of one of these properties where they can go outside and play and you could watch them, or a large crowded apartment building? It's the big question. Drop your comments below. Hit the like button, subscribe. You're also subscribed to my second YouTube channel. It's going to be an interactive show and a podcast coming up this week. Links for that down below. And LinkedIn, Twitter, Instagram, TikTok, everything's in the banner. If you want to make money online, you need help building on a YouTube channel, you want to get on the YouTube grind with me, CashNow.Video. You want to invest in real estate when the market crashes, which there's a lot of uncertainty. There's going to be some big opportunities in the real estate space. CashNow.Video. If you need help with your credit, you want to buy properties, you want to get an auto loan, you want to do something when the market changes, but you need help with your credit now, my team would love to help you. CashNow.Video. And I'll catch you guys in the next one.